So yes, I believe there is a strong rally coming off the back of yesterday's video that I talked about. But I also want to sort of help you understand what's happening right now, why the rally is likely to come over the next few weeks, but why it's a massive warning sign that this could be the top in the markets, and this short-term rally we're going to experience over the next few weeks could just be the start of a much bigger leg on the downward trend. And if you're a trader of these markets, this is really important to understand, to see what the big boys are thinking and feeling right now. And the big thing of that, we always want to see and how we understand what the big boys who push this market around are thinking and feeling is we simply look at the market and what the market is actually telling us. Because when the market is telling us a story that the big boys are then telling us, they're telling us what they're thinking and feeling at the time. So let me explain something to you here. I really want to sort of help you, guide you through this process here, because over my last 20 years of my trading experience, I've learned some really amazing things. That first thing in the description there, guys, I'm actually running a webinar today. I'm going to talk to you about the biggest mistakes I made, how I was $250,000 in debt. I teach you my trading system as well too. I teach you how I find my trades and so much more on that webinar. It goes for over an hour long and you're going to absolutely love it. So go join my webinar today, guys, and I promise you that if you're struggling right now, secret number 1 out of 3 is going to really, really help you. Anyway, so the one thing that I really understand over the last 20 years of trading the markets is my thinking is always mostly wrong, right? If I bring my thoughts to this market, and my thoughts is like, I think something's going to happen. But whenever I see what the market is actually telling me, and what does that actually mean? Here's the thing about uptrends, downtrends, and sideways movements, okay? If I bring up, say, this chart here for a minute, and I'm just going to bring up this here. I want to explain something to you here. What happens here is this, is that whenever we do go through swings and movement in the market doesn't just go straight down, right? The market will start to give us a bit of a warning sign that we're starting to top out. And it's just up to us to listen to that. Now remember, what is the market? The market is the big boys, right? So if you ever want to know what the big boys are thinking and feeling, bring up a weekly chart like we are right now on the S&P. This is the S&P cash market. And you'll be able to see what the big boys are thinking and feeling at any particular time. And so there's a few different trends, right? There is no trend when the market goes sideways. There is an upward trend when the market goes up, comes down, higher, low, right? Comes down through there, higher, low, right? And then higher, low. So we get those phases in the markets, but also in a downward trend, what do we get? We get down, we rally up to create a lower high, don't we? Come down, and this is a downward trend. This is what's called a downward phase. If you go look back at all of these markets out there, or all of, should I say, through history, then what's likely to happen is that you'll see that, remember, a crash takes time. And what I want to do, I want to neutralize your position. Your journey is not to freak out, but stay calm, but make smart choices. What does that mean? Don't freak out, stay calm. The reason why I say don't freak out and stay calm is because a lot of people think we're just going to see complete red bars all the way down, especially when it comes to the major indices here, NASDAQ, Dow. That's probably not going to happen, especially in the major indices, okay? What they tend to do is they tend to slowly create tops, and then the significant movement on the downside starts from there. So how we start to see this, remember, when the market is in a clear upward trend, the big boys are continue to buy it up. So we continue going up, we come down, we make a higher low, come down, make a higher low, make a higher low, right? But what happens if we rally up and then we come down and then we actually then make a lower low? The higher lows are the most important part to an upward trend. So as long as the market's making these higher lows, the big boys, and this is why it's so important just to read what the market is telling you, the big boys are pushing this market up. Okay, we come back down, they sell it off for a bit, they buy it up, they create the higher low, and that's where the trend is your friend until the end. Now, as a trader myself, the trend will eventually end, and we're either going to turn into a flattening phase where we don't do much, or we're going to start to create a bit of a topping pattern and we're going to start into a bear market, which then can lead into much more stronger selling, which is now called a crash, right? But the very first warning sign that the trend is actually changing and we're starting to go into potentially downward movement is we actually break the low. So as you can see here, this low here, this low here is higher than this low here, this low here. But as you can see, we were making higher lows, but then we came down to create a what? A lower low in the market. Now, when the market makes a lower low and we're selling off strongly through here, call this a 10% drop on the downside, like the S&P right now, what tends to happen? What tends to happen is that we end up getting what? We end up getting a bit of a bounce. Now, why do we get the bounce in the market? Because remember, the market is not just going to keep doing this and this and this and this. It's not going to keep doing that for 20, 30, 40%. If we're going to see that type of move, what do we see? The market is likely to bounce. Now, why does the market bounce here? Because even if this is the top in the markets, the market bounces to then rally up, call this a few weeks of movement on the upside, to then create the lower high, which is now a downward trend, aka crash. Because remember, if you think about the global financial crisis, 2008, that's 365 days, right? You look at the chart, what was it doing? Just lower highs all the way down. So that's the reason why right now, if we see what's happening here, we do get the rally, but the rally could just be very short-lived over a few week period. And then we create the lower high. And that's where the big boys are talking to us. And this is where we need to listen to what the market is telling us and not the other stuff on the external event there. So if we have a look at this level here, right? If we have a look at what's happening here on the big weekly charts, notice this S&P 500 chart here. Notice if I bring up the low, higher low, higher low, higher low, higher low, even this big drop here last year, higher low. We had a small little high low here as well, rallied up, came down, higher low. Notice how right now is the very first time we dropped and we broke the low. What does that mean? Means we're no longer in an upward trend. The big boys are now starting to give us a bit of a warning sign of what they're actually really doing with this market. This is the first warning sign that the top is in, because we never know when the top's definitely going to be in, right? But this is the very first warning sign that the top is in. And then now all we need now is we need that lower high to create the topping pattern, right? Just like back here. Right, notice how this bear market phase through here, what did we have? We had this, see this low through here and this low through here? Notice how we were making higher lows, higher lows, higher lows, higher lows, higher lows. As soon as we broke the low, we came down, what happened? We rallied, now again, this is a weekly chart, right? So we rallied for 3 weeks on the upside. What did it do though? It rallied to create the lower high and then we started the downward trend. So that's the reason why I'm expecting to see a rally out of the markets, but the rally right now, and if we actually go do this here, the rally right now, and especially on the daily charts here, it may be very short-lived, or it may just be now setting up to, we got potentially the top, we broke down. And if we're going to start the downward phase, right, we're going to get a rally through here, maybe a nice, good, strong rally for the next few weeks. And if the market does start to hold and rally through here and we get something like that, all bets are off for the bull market, because then we're probably likely to see the really big drop and then the recession's coming and so on and so forth. So the market gives us early warning signs first. The market doesn't just go straight down. The market gives us early warning signs first. And so if I bring up, say, for example, 2008, the global financial crisis, right? Because we all remember that, right? Or most of us do anyway. What do we have here? And this is where it gets so important, right? We have what? Low, higher 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 low. Look at this here. Look at all those major significant higher lows all the way up. What ends up happening? What happens is what? We actually break. See how right here, this point right here, see how we actually broke the low. This is the first time here out of all, ever since 2003, 4, 5, 6, right? coming all the way up, all the way up. We actually broke the low. When we did break the low, what ended up happening? We broke it, didn't we? We came down, but what happened? We actually what? We actually went for a rally, didn't we? For actually a few months here. Then it created the lower high, and then we saw the really big bang happens here. And this is where it's so important to understand about what's happening in the markets right now. Yes, we're likely to get a rally, but the rally, once again, could be just very short-lived over the next few weeks. And it could just be setting up for another one of these. And then the next big bang is probably not going to be like this. The next big bang could see a really big drop. We're talking like possibly a 50% drop in the market. And the NASDAQ is doing the exact same thing as well too. Right, so if we actually go look at the NASDAQ, same thing as well too. We're making higher lows, but we've dropped back down to the downside. If we go look at the Dow Jones, right, the Dow Jones is also now, as of today, doing the same thing. So yes, while I'm expecting a rally, and the Fear and Greed Index, if you watched yesterday's video, is now saying we're probably likely to get that rally out of the markets. Yes, we're probably going to get that. But it's really important to understand about what is going on with these markets. So when we do get the rally, we just want to be very cautious around where we are right now in the markets. But then, once again, if we do start to create, remember I said before, if the market rallies up and we hold, right, because we never know, this could just be some sort of V-bottom, we continue up. And we hold generally around the 50 to 60% of this level here. And then we start to roll over and we do something like that and we come down to here. If this happens, guys, get ready for a massive move on the downside. And through all of this process, this is what I say, guys, through the bull market and bear market, I don't want you to guess. I want you to understand what goes into a high quality setup, both for bullish phases and bearish phases. And that's what I'm going to be teaching you on my webinar today. So go to my very first link in the description there, guys. Go join my webinar today, and I promise you, I'll teach you how to, as this market's going down, I'll teach you the bearish setups that I look for that can do so well in the next coming crash.